XTERA community, how is everyone doing today? It's always such a joy to connect with you. Some of you I've known for a while and it feels like catching up with friends. Others are here for the very first time and I want to say a special welcome to you. You are joining not just a webinar but a real community, and I think you'll feel that energy right away. Let me congratulate all of you for taking the time to join today. It shows your commitment to learn, to engage, and to grow. So, are you excited? Are you ready to get started? If you are, drop it in the chat or give me a quick thumbs up so I know you're with me. Before we dive into today's training, let me share a quick overview of who we are at XTERA and what we stand for, especially for our guests who are listening in for the very first time. At XTERA, our mission is simple: to empower people with tools, knowledge, and opportunities that make success in trading and finance accessible and convenient through our unique trading platform. We provide three things for our community. First, a powerful platform and technology that simplify what's often complex. Second, training and education, where experts guide you step by step so you actually understand the strategies and get a better sense of how amazing, simple, but super effective the XTERA trading platform is. Third, and finally, a supportive community, because learning and growing together is so much stronger than going alone. That's what makes XTERA unique. It's not just a platform, not just a training, but a combination of tools, knowledge, and people. And the momentum we are building together, your feedback, your success stories, is what fuels our growth and shows us we are on the right path. We are not chasing trends. We are shaping the future of personal wealth for everyone. And here's the truth. Our way of doing things is without competition. We never stop improving. We never stop innovating. That's the XTERA DNA. Now, let me remind you of our vision: to become the most trusted and successful platform for millions of people to shape their financial future to success. This isn't just a slogan. This is our mission. And each of you here today is a living, breathing part of that vision. Without you, it doesn't work. With you, we are unstoppable. Now, speaking of training, I'm very excited about what we have prepared today. Many of you will remember Christopher from earlier sessions, where he worked alongside Darren. Today, Christopher is leading the training all by himself. And that's something special. Christopher has more than 10 years of experience in trading. He's been successful in the markets, but just as important, he has a real talent for teaching, making the complex simple and turning knowledge into action. And this isn't just a one-off session. We have designed a series of trainings, each one building on the last. So it's not just information, it's a journey. A course that will help you truly understand what we are doing at XTERA, why it's so powerful and how it can work for you. So I encourage you, stay engaged, ask your questions, share your feedback, because your voice is what keeps XTERA alive. And your energy is what makes this community so special. Thank you for being here. Thank you for your trust. And now, give me one more big thumbs up in the chat. And let's welcome our trainer for today's session. Christopher, the stage is yours.
What's up everyone, it's Chris here, and I just wanted to quickly take the time to thank you, Daniel, for an amazing introduction. I'm calling in all the way from South Africa. As you guys know, my name is Chris. I've been trading for just under a decade, so almost 10 years, and I'm excited to be spending some time with you today, to be sharing some knowledge. And today we're going to dive into building a foundation, right? We are going to do a educational video series, and every single time I interact with you guys, I jump on a call with you guys, I want to build on what we did previously, right? I think it's really cool for us. It's going to be a really cool journey. So I want you guys to focus, to take notes, and to pay attention, because these things are very important. And I believe it's always good to have a comprehensive understanding of trading, even if you don't trade yourself, because it could give you some knowledge and some background for you to make informed decisions in the future. So let's get straight into it. So as you guys can see, today we're going to be building the foundation, right? And the foundation is, what is trading? So many of you out there, you may be wondering, what is trading? It's this word that gets thrown around a lot, but what actually is it? What do traders do, right? And we're going to dive into all of that today and basically just start building the foundation, right? So like I said over here, there's a lot of things that can come to mind when you hear the word trading, right? A lot of you may even think that it's quick money. Is it high risk? Is it low risk? What is the difference between trading and investing, right? And I'll tell you guys a quick story about myself. So when I started trading straight after university, or actually in university, I had this picture of a lot of money really quickly, nice cars, a big house, a big family, all of the nice things that traders want, right? And the reasons why traders start trading. But it's funny how with every trader, it's the same thing. They start trading for that reason. They start realizing that trading isn't what they thought it was, right? But it can still make you a lot of money, but it's a bit more complicated than that, right? So you have to have a lot of patience, you have to have a lot of discipline, and you have to instill good habits within yourself. So that's why it's really important to understand a lot about yourself, a lot about what it is that you need to do and what you need to achieve, and what is the effective ways to achieve that, right? So like I said, when I started trading, I thought it was going to be glamorous, a lot of money really quickly, and I very, very soon learned that that's not the case, right? I think the most difficult part in trading is actually learning how to trade, right? It's the same as if you want to become a doctor or a lawyer or engineer or whatever you want to become, right? You need to study, you need to learn, you need to do practical work, and then you get better the more you practice, right? And it's the same in trading. Think about it. If a doctor wants to study, it can take many years. Do practical work, it can take many years. And then they get better with the more experience that they pick up. You'll always see job advertisements that say they're looking for 10 years or 15 years experience because they want a certain caliber of person, right? Not necessarily any doctor. So for traders, it's the same thing. And I think a lot of traders start trading with the wrong mindset. They start trading thinking it's going to be quick money. And it is quick money, but you need to redefine what your quick is, right? You cannot say your quick is 3 months or 6 months or 1 year or whatever the case may be, right? It can take many years to build up to a point where it looks like it was an overnight success, but it was many years in the making, right? And it's almost like that picture, I don't know if you guys have seen it, where it has a massive rock under the water, but displayed above the water is a little tip of the rock, right? And people don't understand everything that goes into trading, right? So today I'm going to break down for you what is trading, what's the difference between trading and investing. We are going to dive into different market types, asset classes, and also what makes trading work, you know. Also, I'm going to dive into the different styles of trading. Myself, I've also traded different styles, and we will also touch on some trading myths because I know you guys like those. So let me know in the chat if you guys are ready, and if you guys are ready and you guys are excited, we can get going in this lesson. So like I said, we are going to be diving down into the foundation. So first, what I want to touch on is the definitions and the differences between trading and investing, right? Investing is more long-term focused. So if you think about investing, it's more building wealth, right? And more often than not, it's with retirement funds, properties, index funds, whatever the case may be, right? These are often provided by financial institutions, banks, whatever the case may be. Now, trading is a bit different, right? Trading is more short to medium term focus, right? And I say short to medium term, I'd probably say 5 to 10 to 15 years. Where long term is more your lifetime, right? People build towards retirement annuities and retirement funds and pay off properties for 20, 30 years, right? Trading allows us to take advantage of the price fluctuations in shorter periods of time, right? And not just put money somewhere, someone else also makes a lot of money from it, and you get your 8% or 10% for the year, right? In trading, you are exposed to make more money, right? But you're also exposed to more risks. So you need to understand exactly what it is that you're getting yourself involved with, right? Now, I say that because experienced traders like myself, once you understand the risks, once you understand how to manage and control those risks, right, and take the responsibility of managing the risk, there is lucrative amounts of returns that can come from trading compared to investing, right? Investing is often considered as very low risk, very long-term wealth building, right? So an example that I put here is an investor, someone that, for example, bought Microsoft in 2010. They invested in the company, and they're still holding these positions, right? Whereas myself as a trader, I can buy Microsoft stocks or shares right after earnings, right? And sell maybe 1 week or 2 weeks later, and I can profit off of a very short fluctuation. I can also profit when the stock doesn't do well. I can short the stock, right? And we will touch on that in next lessons, right? So we as traders can make money on both sides of the market. We can make money buying and make money selling, right? Where sometimes if you are invested long term, you only make money when something does well, right? Not necessarily when something doesn't well. You do not have the ability to short it, right? Because you are invested that it will go up over time. Whereas myself as a trader, whether Microsoft does well or whether they don't do well, if I can anticipate that, I can make money from those price fluctuations. So they both serve different personalities, and they both serve to different goals, right? Like I said, often with long-term wealth building, you have to have a lot of money to make a lot of money, right? Whereas with trading, I started from not a lot of money, right? And today, at 29 years old, I live a very blessed life, and I'm very grateful and very fortunate in that sense. So to summarize, they both serve different personalities, and they both serve different goals, right? Now, let's talk about asset classes. What different types of asset classes are there, right? I'm sure many of you guys, and you can let me know in the comments or in the chat, if you guys have heard of stocks. Of course you have. Cryptos like Bitcoin, Ethereum, Ripple, indices like NAS 100, the Dow Jones, US 30, the DAX, and then we also have commodities like gold, and then we have foreign exchange, right, which is what I mostly trade, but different traders specialize in different asset classes, and I will tell you what the actual trick is to asset classes, right? And remember this word, the key to anything in life is good balance, right? So to be diversified amongst these is really healthy. But as a trader, it's difficult to trade all of these things because they are different markets. Some people specialize in crypto, some people specialize in indices, some people specialize in stocks, and some people specialize in Forex, right? I myself, I trade the euro dollar. I also trade a bit of gold, but that is as far as it goes. I try not to stretch myself too far because the asset classes are very different, and it takes a long time to learn and understand how they move, why they move. And that's why I'm saying. So myself as a trader, it's difficult to spread myself across the board, right? But in an ideal world, you have access to all of these things. Like as an example, in an XTERA product, where you have access to indices traders, crypto traders, commodity traders, stocks, and foreign exchange traders, right? Which is absolutely amazing. And then you have me that focuses on something specific to make the asset classes profitable as a whole, right? Now, you have over here an example of each of those, and I'll talk you guys through them. So foreign exchanges, like I said to you, the euro dollar, right? Why is this an asset? It's basically one asset, and it measures, right? The euro is the base currency, the dollar is the quoted currency, and the quoted currency measures how much the base currency costs, right? So it's basically two currencies versus each other, and you get a price for it, right? And it will then basically just tell me how many dollars it will cost to buy 1 euro. And that is basically what I trade. So when the dollar strengthens, when the euro weakens, when the euro strengthens and the dollar weakens, whatever the case may be, right? I need to know what's going on so that I can trade that specific asset class fundamentally and technically, right? And then we have examples of stocks, and stocks is like Tesla earnings, for example, iPhone releasing, right, and Apple declaring their earnings. This is when stocks do really well. Now, stocks are specific stocks like Tesla, like Microsoft, Nvidia, whatever stocks you can think of, right? Now, commodities is stuff like gold, right, which is obviously a safe haven, right? So when there is panic in the economy, or when things happen like COVID, you see stuff like gold do really well, right? When there are wars around the world, you see stuff like gold doing really well, right? Whenever there is uncertainty, people move their money from fiat and they put it into safe havens, right? Remember that I told you guys about the risk on, risk off. And this is exactly what I'm talking about. People move their money into safe havens like gold, right? And then you see maybe different currencies do weaker because the demand for them is lower, but the demand for gold goes up. Therefore, the price of gold goes up. Then we also have crypto, right? People like to put money into crypto when the economies are good, right? When they want to move money to different places to possibly make more money, right? Crypto is a lot more volatile, but it can also make lucrative returns. It's also the new kid on the block. Everyone speaks about it. Everyone wants to trade it. Not many people know exactly a lot about it. So that is exactly an example of crypto. Like I said earlier, we also have Ethereum, Ripple, all sorts, right? Then we move on to indices. Now, I really like indices for the pure fact that it consolidates many things into one. I'm sure you guys have heard of the DAX or US 30, Dow Jones, or the NASDAQ 100. As an example, what is the NASDAQ 100? NASDAQ 100 is basically an index, right? An index in which the top 100 tech companies in the US are consolidated into one asset class. So in the chart on the right hand side over here, you can see that the asset class moves up over time, right? And this is a picture of NASDAQ 100. Now, a lot of people may think, why does this asset class go up over time, right? And it's because of the fact that it's always the top 100 performing stocks. So if you're in the bottom 10 and you don't do well, you get kicked out and the new 10 gets put in, right? It's always the top 100 best performing. So it gives you a good indication of the tech space in the US, right? And we know that technology and AI and software and all of these companies like Zoom, as an example, these are companies that do well, right? And have done well in the last couple of years. And that's why we had seen such an amazing increase in indices like that. But it's nice because it consolidates all of those companies into one index that's tradable, which is very nice, right? And trading, this is just like a little analogy that I added at the bottom. Trading Forex is like surfing small but constant waves, right? And that's myself. I don't want big home runs. I just want to take my trades every single day, every single week, every single month, and hopefully make really good money from it. And I want to do that consistently, right? Where you do get traders that are a lot more, they want to take on a lot more risk. They want to make a lot more money, and they're chasing bigger profits, right? And there's nothing wrong with it. But like I said, the key in life is not I'm right or the person that's trading a lot, chasing a lot of profit is right. But the key in life is balance. Having a balance between everything, right? So that throughout any type of investing is the most important, to always be diversified and always be balanced, right? Now, I want to chat to you guys about something I just touched on in the previous slide. And this is liquidity versus volatility, right? And I'm going to use a real world analogy to basically just explain this to you. Now, in the markets, you always hear people throw around the words liquidity, and you hear people throw around the words volatility, right? What is liquidity? How can we understand this, right? Now, liquidity is just how liquid the market is, right? And that's why I trade Euro USD, because if I trade really big positions, I know there's a lot of liquidity, and if I place a buy or a sell order, it will get processed, right? Because it's a very liquid market, right? Now, you also have markets that aren't so liquid, meaning that if you wanted to exit or enter a position, the market is not so liquid and you may incur slippage on your positions, right? And an analogy that we can use is this, right? It's like if you are trying to sell your car, right? Which a lot of people do. They put their car on the websites or on Facebook Marketplace, whatever the case may be, right? It's pretty simple to sell a car, right? But to sell a house is a different story. Selling a home can take a couple of years, right? It can take a much longer time on average to sell a house. The process to sell a house is a lot more complex and complicated than the process to sell a car, right? And that's just a real life example that you can use for liquidity, right? So if I'm trading and I'm, for example, in the market of selling cars, I know that I will sell a lot more cars, right, than the person that is selling homes. I can sell 60 cars in a specific month, where the person selling homes maybe sells 1 or 2, maybe even 3 homes in a single month, right? But they can make a lot more money doing so. So it all depends, right? Then we also have volatility, right? So you'll often hear people also say the markets are very volatile, right? That means that the market's going up and down and up and down. It's very volatile, right? It's moving erratically. And this is basically just like I said over here, this is a calm ocean versus a stormy ocean, right? If you have a calm ocean, it's nice to trade in those conditions. Yes, with volatility, right? Because we as traders make money when something goes up or it goes down, we can short it, right? Volatile conditions are nice because you can make a lot of money, but you also need to manage your risk very carefully. You don't need to overexpose yourself because you need to understand the market that you are involved in, right? And with greater responsibility, with greater risk, you have to have greater responsibility, right? So you need experience in these markets to trade the balance. And that's why I said to you, if you look at a market now as a beginner trader and I ask you, listen, is this chart over here volatile? Is this asset class liquid? Can you process, for example, 100 lots easily? Will you incur slippage? What times of the year does it become volatile? These are things you learn as a trader through experience, right? Trading in the markets for multiple months, multiple years, and that's why it's important to have this type of experience. Now, on to the next slide. I thought it would be really cool to cover with you guys types of traders, right? And after this, I want you guys to let me know in the comments, or let me know in the comments or the chat, when something resonates with you and that you think that that type of trading resonates, or style of trading resonates with you, right? So let's kick it off with scalpers, right? So we're going to go with the very, very short-term traders. Now, this is extremely short-term. These traders hold trades for a couple seconds to minutes, and their whole goal is to capture many tiny moves throughout the day, right? But they do this many times. It can be 10, 20, 30, 40, 50 times a day, right? I've seen scalpers take over 100 trades in a single day, right? And all they do is they try to make a couple pips, right? They try to make a couple pips every single day with every single trade, but have many trades, right? So it's almost like a sprinter that is running multiple quick bursts, right? And in trading, our sprinters are our scalpers because they do very short term, but they do many of them, right? It can make you money fast, right? Because of the frequency of the trading. But this is the type of trading that requires the most skill. It requires the most discipline. And this is when fees and spreads become important because it is the most expensive form to trade, right? Because think about it, every time you trade, you pay to trade, right? You pay a spread, you pay a fee to place a trade. And if you place many of them throughout the day, you have to be so net profitable that you cover those fees that you incur throughout the day, right? Then you get the day traders like myself. I'm not a scalper. I don't like that. It's a bit too quick for me. I like to make my decisions with a clear mind, and I'm a day trader, right? These are traders that hold trades for minutes to hours, right? I can also be in a trade maybe 1, 2 hours, 30 minutes, whatever the case may be. Sometimes they are quick and they happen in 10 minutes. But at the end of the day, when the market closes, I'm out of my positions, right? And that's nice because I can enjoy dinner. Tomorrow is a new day. If today I didn't have a great day, tomorrow I wake up and it's a new day with new opportunities. And it's nice. You basically just go from day to day, right, as a day trader. And it's to take advantage of the daily movements and the daily volatility. There's no overnight risk. And, for example, like I can catch a trade on gold, actually, like I did yesterday. And, I can take it in New York session and maybe an hour or two after that, it's done. I probably trade for a total of 4 to 5 hours in a day, depending on when the action's happening. And if there's no action happening, like yesterday, I was waiting and looking for trades the whole of London session, which is 3, 4, 5 hours, but nothing happened, right? And I didn't take any trades. So even though I am trading, right, I can see when my opportunities are there and they aren't there. But it's almost like working a 9 to 5 job. You start in the morning and then you end in the evening, right? And that's exactly how I trade myself as well, right? The pros and the cons of this, like I said, the pros are there's no overnight stress, but it also requires being in front of the charts a lot of the time. Like yesterday, I spent 2 to 3 hours in the morning on the charts analyzing, but I didn't take any trades, right? So let's move on to the next traders. We also have swing traders, right? These are traders that hold trades for days to weeks, and their goal is to catch larger moves over time, right? They want to catch market trends, anticipate price reversals, whatever the case may be, right? And this is an example of someone that's buying gold after it broke out of a key level, and they can hold this position for 2 weeks, 3 weeks, right? The analogy that I'd put here is almost like surfing, but you have to be very picky. You have to be very disciplined. They don't come as often, right? So for myself, I can take 1 to 2 trades every day, but a swing trader may not take a trade every day. They may take a trade once every week or once every 2 weeks, whatever the case may be, right? And then they have to ride that wave, and they have to try to extract the most profit from that specific trade, right? The pros and the cons, it's a lot less screen time, so that is a benefit. You can make bigger profits per trade, remember, because you're trading less, right? But it requires a lot of patience, and you have to be able to hold drawdowns for, like if you hold a drawdown for 2 weeks and only your position goes into profit, you have to be able to handle that type of movement, right? And then we also have position traders. Position traders, these are very long-term trades, right? They hold trades for months, if not even years. And these trades are based on fundamentals, long-term trends. They have, for example, hold a position on the dollar yen for 6 months, right? Just because of interest rates that may be changed or whatever the case may be. So these are very, very patient traders, and I don't have this type of patience, right? But it's almost like an investor in our space, but they're still using technical tools. They're still using fundamentals, and they aren't super long term. They still close their positions within a couple months, right? This is very little screen time. You can imagine to yourself, like, it's almost like buying a stock and you watch it maybe once a month, once every 6 months, whatever the case may be. It's very little screen time. You check in ever so often, but it does require a lot of capital, right? And you need strong conviction to take trades. And if you're not well informed or well educated or have enough experience to do this type of trading, it's also difficult, right? And then at the bottom, we have what a lot of people are talking about, right? And it's not, I wouldn't consider it a type of trading, and that's why I put it in as optional, right? Because a lot of institutions are using algorithmic or automated trading. A lot of companies are using a diversified part of algorithmic and automated trading, and a lot of people speak about it and say the algorithm, right? And it's nice because in theory, you can remove your emotion and you can code this logic, right, into a machine. But what I will say is this, is the market is a very complex environment, right? And sometimes to have human discretion and human oversight, right, over these machines is very important, right? Because they are coded to do specific things. But the market doesn't do the same thing all the time. It always changes, right? And that's why most of the algorithmic systems don't do well over long periods of time. It can do well in a specific time, but over long times you need to adapt them, update them because of the conditions, right? And it's scalable, yes, it's disciplined, but it's only as good as a strategy that's coded on it, right? So if you don't have a lot of experience, a lot of people go to this type of trading because they can leave it and let it run. It doesn't work like that, right? You have to have a very deep understanding and management of these systems for them to be very profitable. Now, once again, I ask you, right, which one of these types of traders resonated both with you the best, right? Was it scalpers? Was it day traders? Was it swing traders? Was it position traders? Or was it algorithmic trading? Now, I will say this, okay? There is not one that is better than the other. They each are different, right? They have different goals and they make money in their own respect, right? But once again, balance. The key to everything is balance, is to have access to swing traders, position traders, to scalpers, to day traders, right? I myself am a day trader, but I'm one piece of the puzzle, right? I cannot do all of these types of trading in one person. It's very difficult to be knowledgeable and experienced in every single field, right? So once again, like I said, the correct answer is a position or type of trading may resonate with you, but it doesn't make it the right type of trading. It makes it the type of trading that resonates with you, right? But the key to someone is to have, like, if you could be in the best position possible, is to have access to all of these guys, which is ultimately what you want, right? Now, I want to go through common misconceptions about trading, right? And bear with me, because these are things that people have said to me before, and I love trading. I've been a full-time trader, like I said, for many, many years. And when I started out, I would have friends say to me, no, trading is just gambling, right? Or whatever the case may be, right? The thing is, you are taking a risk to make money, right? And in trading, you have a strategy, you have discipline, and you manage your risk, right? When you go to, for example, a roulette table, you cannot decide when you exit, right? You cannot have a specific strategy that is fluid, right? That you can control the whole time. And over here, we also manage our risk. So The difference between trading and gambling, right, is trading, we take a risk to make money, right? And we control all the parameters. I control how much money I risk, when I open that trade, when I close that trade. I control everything about that trade. The only thing I don't control is the markets. That's it. But everything else I control, right? Where it's not always the case like that in gambling. In trading, you stack the odds with you. Whereas in gambling, the odds are stacked against you, all right? Now, what I want to also explain is anything in life is a risk, right? Opening a business, you are taking a risk, right? If you are driving to work in the morning, you take a risk. Everything in life involves some degree of risk, unless, right, we are living in a bubble or whatever the case may be, but everything in life contains some sort of risk. And I had friends that said to me, no, trading is gambling because you are taking risk. No, you take risk when you open a business. You take risk when you take a job. You take risk when you drive to work. You take risk every single day, right? But you need to be in an environment where you can control your risk, you can manage your risk, you can understand the things that are around you. Like, for example, if we are driving the car, we know where the risk lies. This guy may jump the robot, right? Or the traffic light. Someone will maybe not stop. There can be many risks. If we know of them, we can protect ourselves, right? It's the same in trading. With trading, we as traders, we try to put the probability on our side, right? Whereas this is not the case in gambling. In gambling, everything is designed for the odds to be against you, right? But you can be the lucky person to win, but that's not sustainable, right? Where in trading, if I have a 60% win rate and I have a 1:2.5 risk to reward ratio over 3 years, I have a very profitable edge over time. The probabilities are with me, right? And I can make money from the markets over a long period of time. Now, let's dig into trading is a get rich quick, right? Now, I put two things here at the bottom just to show you guys two things, right? A lot of people think that, you know, trading is get rich quick, like I said earlier. And yes, it can be, but you need to redefine what your quick is. Quick is not 3 months, quick is not 6 months, and quick is not 1 year, right? The big differentiator that I've seen in trading, and you see it with someone like Warren Buffett, right? That's made majority of his net worth in the last 10 years, 15 years of his life, right? Why? Because he invested for decades and decades and decades, and they have compounded and compounded and compounded to a point where they are so much, right? And it gets exponential, right? So that's what I'm saying. Like, you need to just redefine what your quick is. In my country, most people pay cars, or they finance cars off. In 5 years, they pay cars, right? And it costs them money. It is a liability. Money is going out of their pocket to the bank for the car, right? But if I say to you, you need to wait 5 years, or invest in an asset for 5 years, or invest in a product for 5 years, or basically just invest in a diversified portfolio for 5 years, right? People say, no, that's too long. But as soon as they need to pay for something or take money out of their pocket, they don't mind doing that for 5 years. That doesn't make sense. Why would you do that for liability, but you don't want to do that for an investment, right? And that's something that I always struggle to understand, because 5 years is not a long time, right? You can look back in 5 years and say, wow, I can't believe what I did in 5 years. Or you could be the person that takes money out of your pocket every month, and you look in 5 years and you say, where's the money gone, right? And that's the difference, is the habits, right? Financial habits that compound over time, right? And that ties in with what I want to say second here. You can see here that it says you need a lot of money to trade. I didn't start with a lot of money, right? I compounded and I grew capital, right? And fortunately at the time I also had a job, right? Just after university. And every single month I would allocate money from that job into my future, into my investments, into my trading, whatever the case may be, right? And we as traders, we've got access to leverage, whatever the case may be also. But the powerful thing that I realized in my journey was when I contributed every single month into growing money instead of something that's depreciating or into liabilities, right? I could see a really big difference. I did the same calculation here at the bottom for you to see this, right? On the left-hand side, you can see there's a calculation for 3 years, both of them. The initial investment is the same for both of them, $5,000, $5,000, right? And I even made the interest like monthly, let's say 5% average over time, and the compound frequency monthly, right? Assuming that someone is not taking this money out, it's staying there, right? Look at the left-hand side. After 3 years, the amount turned into just under $30,000, right? Which is a lot of money, right, for a short space of time. That's what I'm saying. It is quick money, right? It's not made in 3 months or 6 months, but it is in 3 years. But when you look back in 3 years, you say, wow, that's incredible, right? Now look at the right-hand side. This is the same parameters. The only difference on the right-hand side, right, is additional deposits and contributions. Can you see over here on the top right, it says 18,000. And I literally just made it $500 a month for 3 years, right? Look at how the amount goes to $76,000, right? As opposed to $28,000. And on the left-hand side, you made a total of, let's say, $24,000 interest over 3 years. And on the right-hand side, you made more than double that just because of a small contribution every single month into something that makes you money, right? And like I said, it can be anything. But at the end of the day, it's you putting that money to work in a place where it's making money instead of in a place where it's taking money and depreciating, right? And that for me was something that I did and how I managed to build capital for myself as a trader to scale it. And it was just consistent contributions. Instead of buying this nice car, let me drive the car I have and let me take that money and put it into something that can make me money. And that is a big misconception that people have. They think that it's a get rich quick, and like I said, it can make you money, right, in a short space of time, but you need to redefine what quick is. Remember, like I said, with the doctor and the lawyer. And a lot of people think you need a lot of money to make a lot of money because of the markets that we're in, crypto, indices, and the brokers we deal with. They offer leverage, whatever the case may be. This allows us to take positions and to maximize our profits, right? And these small profits, they compound over time. The same like Warren Buffett's net worth, right? And compounding is really, really, really what differentiates making a lot of money and to people, for example, spending all their profits every single year. Now, just to recap, we looked at the difference between trading and investing. And you guys know that trading is not investing, right? The markets are diverse, and you guys also understand that volatility equals opportunity, right? But it also comes with responsibility. And don't fall for trading myths, right? I myself am a trader. Like I said, I've traded almost 10 years. I've heard it all, right? In the beginning, not even my parents understood what I was doing. But today, like I said, I'm 29 years old, and I'm blessed because of trading, right? And because I believed in myself and I could see the returns that were yielded from the markets, right? Now, in the next episode, we're going to chat a bit about, one of probably the most important part of trading, which is risk management. Because if you can protect your money, you can survive the markets long enough to grow that money, right? And this is where experience comes in handy. Trusting experience comes in handy. And I will say this, right? Having balance, like I've been repeating throughout this whole lesson. When I said different types of traders, you would love to have access to all of them. Different types of asset classes. I would love to have my money everywhere, right? So that is why I'm saying sometimes to become a trader can take a long time. can cost you maybe a lot in terms of time and money, with mistakes that you maybe make because you are still learning. And for me, you know, as someone that's choosing, I would love to have access to all of those things, and I do, right? I myself don't just trade my own money. I also put my money into other asset classes, right? And let my money work so that it's also diversified. That's why having products like XTERA, that's a diversified product, is amazing, right? Because it exposes you to different markets, different types of traders, and everything like that. So I want to know, which asset class were you guys most curious about, and which part of today's lesson did you guys find the most interesting? Let me know in the chat. So I hope you guys enjoyed us setting the foundation. I will see you guys next time. I hope you guys enjoyed this information. I love spending time with you guys. I hope you guys love spending time with me just as much. And I just love to share experience and knowledge because I've been in the game and because I've heard and seen everything. So thank you very much. And I'm now going to hand over to Stephen Paul, right, the president of XTERA. And thank you very much.
Chris, thank you so much. That was fantastic. And I'm sure I speak for everyone joining us today when I say that we love spending time with you every bit as much as you love to spend time with us. I'm so excited that you've put together an educational series where each session will continue to build on what we've covered before. And what a way to start! I think we all now have a solid, secure foundation on which to build as we move forward together through your education series. Just phenomenal. Thank you so much again, Chris. I can't wait for the next one. Now, while I think about it, do remember to give Chris some feedback on today's session. I know he's looking forward to hearing your thoughts. So if you haven't already done so, pop your answers to Chris's questions in the chat below. Just to remind you, his questions were: number 1, which asset class were you most curious about? And number 2, which part of today's session did you find most interesting? Personally speaking, I find the whole topic completely fascinating, but I'm probably most curious about crypto. And I love how Chris broke down the 3 biggest myths for us. That was really interesting for me, and I'm certain it was incredibly useful for you guys, especially when you find yourselves out there talking to other people about what we all have in our hands here with XTERA. We're already seeing thousands and thousands of people joining our platform and our community every month. And with the kind of knowledge and understanding you're going to gain through things like Chris's education series, we're going to see a great deal more of that. I'm sure that you've heard it said that Carlsberg is probably the best lager in the world. At least that's what their advertising tells us. Well, XTERA is probably the best platform of its kind in the world. But as Daniel mentioned in his inspiring introduction to today's session, the XTERA DNA, our way of doing things, means we have no competition. We never stop improving, we never stop innovating, and we never stop working to provide you, our partners, with more transparency, more understanding, and the most amazing community that's here to support you. That's the XTERA DNA. And whilst it's often said that there are only 2 certainties in life, those being death and taxes, our goal at XTERA, where your growth matters, is to add one more certainty to that list: consistently solid returns on the money you invest for XTERA to manage on your behalf. And remember, we never stop moving forward. It's in our DNA. Now, after today, you really don't want to miss the next XTERA education session, so mark your calendars right here, right now, because I'm excited to announce that our next session will take place on Sunday the 2nd of November at 4 p.m. UK time. Join us then when we'll be sharing more insights, more information and more expertise to build on the wonderfully solid foundation you have now. It only falls for me to thank Daniel for his incredibly inspiring introduction to today's session, and to thank Chris once again for what was a powerfully illuminating presentation that laid an incredibly solid and secure foundation for each and every one of us. As I said earlier, I can't wait for the next session to start building on that foundation. Thanks again for your time, your attention, and your commitment to learning. On behalf of Daniel, Chris, myself, and the entire XTERA team, I wish you continued success and a fabulous day. We very much look forward to seeing you on the 2nd of November. Bye for now.